For many years, personal finance guru Dave Ramsey has helped people achieve financial independence. Numerous individuals have benefited from his financial classes, publications, and radio show as he has helped them accumulate wealth and pay off debt. But even the most committed adherents of Ramsey's counsel have personal tales of financial missteps. We will examine some of the worst financial blunders disclosed by Dave Ramsey admirers in this video, highlighting typical traps and the lessons discovered along the route. Disregarding the budget. Developing and adhering to a budget is a cornerstone of Dave Ramsey's financial guidance. Nonetheless, a lot of admirers acknowledge that skipping this important stage was their worst error. It's simple to lose track of expenditures and run into financial difficulties if you don't have a clear budget. The takeaway: setting up a budget is crucial to financial success. It gives you a comprehensive picture of your earnings and outlays, empowering you to make wise choices and refrain from going over budget. Taking on credit card debt. Many Americans struggle with credit card debt. Even Ramsey's supporters are not exempt. Many have acknowledged that before learning about Ramsey's principles, they had accumulated considerable credit card debt. Financial strain can result from the lure of easy credit and the propensity to spend more than one has. The takeaway: staying out of credit card debt is essential. Prioritize paying off any existing debt as soon as you can to avoid paying exorbitant interest rates, which could make your financial situation worse. Lack of an emergency savings. Not keeping an emergency fund on hand is another common error. If you don't have a safety net in place, unexpected costs like medical bills or auto repairs might easily cause your finances to collapse. A lot of fans lament not having an emergency fund sooner since it would have kept them out of debt in case of emergencies. The takeaway: it's essential to have an emergency fund. Save enough money to cover your costs for 3 to 6 months in order to guard against unanticipated financial difficulties. Falling for schemes to get rich quickly. Some followers acknowledge falling for schemes promising quick riches in an attempt to achieve financial stability. These schemes typically cause financial loss, even though they frequently promise large rewards with minimal work. Although it can be difficult to resist, the lure of instant money frequently results in disappointment and monetary losses. The takeaway: to get wealthy, there are no shortcuts. It takes time, perseverance, and discipline to build financial security. Any investment that offers low risk and guaranteed high returns should be avoided. Excessive mortgage borrowing. Purchasing a house is a big financial choice, and a few fans acknowledge taking on more debt than they should have. An overpriced property purchase can put you under financial strain and restrict your ability to save money or make other investments. The takeaway: purchasing a property within your means is essential. If you own a 15-year fixed-rate mortgage, pay it back with no more than 25% of your take-home income by following Ramsey's instructions. Postponing retirement funds. A lot of fans are sorry they put off investing for retirement. Because of the compound interest effect, your money will increase more quickly the earlier you start saving. A few fans acknowledge that they put off saving for retirement in favor of other costs and debt repayment, only to discover afterwards how much of an influence this delay had on their financial situation. The takeaway: commence retirement savings as soon as you can. Compound interest allows even tiny payments to increase dramatically over time. Co-signing credit agreements. While co-signing a loan for a friend or relative could seem charitable, it can also result in financial difficulties. A few followers acknowledge that they had co-signed loans and subsequently been left with a debt when the original borrower defaulted. This error can damage relationships in addition to your credit score. The takeaway: take great care while co-signing loans. Recognize the risks and make sure you have the resources to assume the loan in the event that the principal borrower fails. Ignoring your insurance. A strong financial plan must include insurance. However, some fans acknowledge that they had overlooked it. In the event of an accident or disaster, inadequate coverage for homeowners, vehicle, or health insurance can have disastrous financial ramifications. The takeaway: make sure you are adequately covered by insurance to safeguard your belongings and yourself. To guarantee proper protection, review your policies frequently and make adjustments as necessary. Purchasing on impulse. Buying on the spur of the moment is a common error that can seriously damage your money. Numerous admirers acknowledge that they had impulsively bought pointless items that they later regretted. Over time, these impulsive purchases might mount up and throw off your budget. The takeaway: spend money carefully. Before making a purchase, give it careful thought to see if it is both required and within your means. Not exchanging words with a partner. In relationships, failing to discuss money matters with a partner can result in miscommunication and financial strife. A few fans can complain about hiding purchases or not talking to their partners about their financial objectives, which resulted in arguments and costly errors. The takeaway: in a partnership, it is crucial to have honest and open communication regarding finances. Establish financial goals and collaborate with your partner to make decisions. Neglecting to seek expert counsel. Even though Dave Ramsey offers sound counsel, certain financial circumstances need for expert guidance. Several fans acknowledged that they had tried to manage complicated financial matters independently, but had ended in making costly errors. The takeaway: never be reluctant to see a financial counselor, particularly when dealing with complicated matters like investing, estate planning, and tax planning. Expert guidance can provide you comfort and financial savings. Using windfalls to spend rather than save. It might be thrilling to get a windfall, such as an inheritance, bonus, or tax refund. Some fans did, however, acknowledge that they frittered away their windfalls rather than putting them aside or investing them. Making this error could keep you from becoming closer to your financial objectives. The takeaway: be prudent with windfalls. Think about putting them toward investments for the future, debt repayment, or increasing your emergency fund. Ignoring unexpected charges. Unexpected costs associated with credit cards, bank accounts, and investments might deplete your funds. A few fans acknowledged that they had neglected to pay attention to these fees, which eventually resulted in needless financial losses. The takeaway: make sure you are aware of all the expenses related to your financial goods. When at all possible, select low-cost solutions and keep an eye out for any unforeseen charges on your accounts. Ignoring the total cost of ownership. Beyond the original purchase price, there are ongoing costs associated with owning a car or home. When maintenance, repairs, and other recurring expenses were included in, some fans acknowledged that they had underestimated these costs, which put a strain on their finances. The takeaway: before making a purchase, weigh all the costs associated with ownership. To prevent unpleasant financial surprises, budget for upkeep, repairs, insurance, and other relevant charges. Not making debt repayment a priority. A few fans acknowledged that they choose to prioritize other financial objectives or discretionary spending above paying off their debt. Over time, this error may result in longer debt repayment terms and higher interest rates. The takeaway: give paying off debt top priority. By paying off smaller obligations first, you can build momentum and determination to take on larger debts by using Ramsey's debt snowball strategy. Disregarding financial education. Finally, a few admirers acknowledged scoffing at financial literacy. They didn't try to learn more about personal finance. They just followed the simplest of recommendations. This ignorance resulted in errors and lost chances. The takeaway: make an educational investment in finance. To improve your decision-making and steer clear of costly blunders, read books, go to seminars, and keep up the personal finance. Maintaining focus on financial objectives. Fans of Dave Ramsey stress the need of maintaining commitment to financial goals in the face of failures. Achieving financial freedom takes time, and there are frequently obstacles and temptations along the way. The journey demands discipline and patience, whether it's overcoming past financial mistakes, handling unforeseen bills, or restraining oneself from splurging. Many fans who have been successful in reducing their debt and accumulating wealth credit their achievements to a strong dedication to their financial plans and objectives. They stress the significance of routine evaluations, budget modifications, and maintaining attention on the long-term goal. The road to long-term financial security and mental tranquility ultimately leads to this unshakable dedication. In summary, like everyone else, Dave Ramsey's followers are susceptible to financial errors. The most important lesson to be learned from their admissions is the necessity of being proactive in enhancing one's financial habits and taking note of the mistakes made. You may avoid frequent traps and work toward a more secure financial future by following Ramsey's ideas of budgeting, debt avoidance, emergency fund building, and wise financial decision-making. Recognizing these typical errors and the lessons they teach can help you steer clear of similar blunders. Recall that attaining wealth and financial security calls for perseverance, discipline, and ongoing education. Accept the trip, pick up knowledge from others, and use these realizations in your own financial situation. Please like, comment, and share our video with your friends and family if you enjoy it. Remember to click the bell icon to receive the most recent updates.